If you look at the markets, about 37 odd points lower as far as Nifty is concerned. Slight bit of recovery, but again, it's not a great recovery. We are still off the day's low and just about 10 points away from the lowest point on the day. Metals as a pack has been doing well. Some of the names have done particularly quite well. Just to get a further perspective on the metals pack, Tarang Bhanushali, AVP-research at India Infoline, now joins us on a phone line. Tarang, can you tell us your view about the metals pack? Why do you think this buzz is coming in now? It's substantially, these names are up about 30-40% of the lowest the lows that they made in about last 10 days time.
Well, what we have seen is that the pessimism has reduced quite a bit over the last 15 days. The market players were expecting commodity prices to slide further, but we have seen some consolidation over there. This has largely come up post the news that major producers would be cutting their production. So again, that is a sign that prices have bottomed out and would largely remain around these levels. We do not expect a major rally in most of the base metals, considering that we have large inventories at the exchanges. So that would cap the upside. But yes, we feel that we are already near the bottom and almost we have made a bottom and prices would largely remain around the current level. So the pessimism has reduced quite a bit. And we have seen some value buying in most of the stocks. Most of the stocks were down 40-50% to more than that 60% from their peak. So again, some value buying has led to the rally in most of the metal stocks.
Are you of the view that from a long-term basis, metal stocks, at least the large cap ones, are looking in decent if somebody has a view of over 2.5-3 years?
We would be quite stock specific in the metals pack. We like Hindustan Zinc, we like Vedanta because of the holdings in Hindustan Zinc and the oil business it has. So we like in the non-ferrous space again. We like Nalco because we believe it is one of the lowest cost producers of alumina. So the benefits would come over there. In the steel space, we like JSW Steel. It is the top buy. We would not be buyers of Tata Steel at current prices. Maybe corrections can be used to accumulate fresh positions in the stock.
Right. And what would you make in terms of numbers or results? At least for the next 2-3 quarters, numbers would be quite weak.
Well, Q2 again would be largely stressed out. Most of the steel companies would be reporting. In fact, all the steel companies, if you look at the operational numbers, they would be reporting loss, except Tata Steel, which would have an other income, which would lead to positive profits for them. So most of the steel companies would be reporting loss. In the non-ferrous, we would see margin pressures coming because prices have declined 10-11% on a Q-on-Q basis. So there we would see some impact on the margins over there. So largely, I believe that a revival in earnings would be largely from Q4, wherein the volumes would pick up and the prices would have stabilized to some extent. So I think the revival in earnings would be largely seen from Q4. Q3, I believe, would be again a washout quarter for most of the year.
Right. Tarang, thank you so much for joining us here this afternoon. Thank you so much for taking out time for us.